Hello, everyone. I'm your host, Sejal Thakkar, and today we're going to do something different. I'm going to take on the role of a potential investor, and I'm going to step into the shoes of someone who's looking to make a strategic investment in Nobody Studios. And so for this live stream, I'm going to be asking questions that any serious investor would want to know before making a commitment to our own CEO and Chief Visionary, Mark McNally. Welcome back, Mark.
Hi, Sejal.
Hi there. I see that you're in your car today. I kind of like that look.
I know. I think it might be our first live stream from my car. Sometimes I've been like racing to the office to make it in time, but this is the first time I had to do it from the car.
Surprisingly, because we're over 30 episodes by now. You would have think we would have had one before today, but this is the
You're
first
right.
time.
That's why I had no problem telling you I'm calling from the car today.
Perfect. Awesome. As long as your internet cooperates, and I'll just keep talking if you pop off for a second, like I did the last time where you jumped off for a second. So look, I'm excited to get into this conversation today because, I'm going to play the role of an investor, and I'm going to be asking you some questions and really digging into the details, because when we're in the world of investing and I'm looking where to put my hard-earned money, I need to know the details, because that makes all the difference, right? To figure out whether this is a right fit for an investor like me. And so, Mark, I've been talking to several trusted resources of mine and the people that I'm connected to, and they've all told me that Nobody Studios has a compelling value proposition, right? Which, of course, piqued my interest. So I really appreciate you making time out of your busy day to meet with me today. And, as an investor, I'm always looking to see, like, I'm seeing more and more venture studios. A few years ago, I don't hear a lot about venture studios. It was kind of something new, but now it seems like venture studios are popping up all over the place. And for me, I'm looking for something that truly stands out. So what I want to understand is what sets Nobody Studios apart from the rest of these venture studios that are coming in, and why should I consider investing in Nobody Studios versus some other studio?
Well, first of all, I'd say the venture studio is an asset class. It's something that's kind of new. Meaning asset class, usually when you're thinking about investing, you're going to allocate a certain percentage of your portfolio to real estate, a certain percentage of your portfolio to T-bills, mutual funds. You're going to have a mix of where you want to allocate. Venture studios is now considered an asset class. It's kind of new. People in the past would have maybe, with a lot of capital, might consider investing into a venture capital fund. And there's a lot of merits to venture capital funds. People have done well with that. We don't see ourselves competitive, but we're in that neighborhood, right? We actually think of venture studios as what is, again, an asset class, talking about the entire industry. We're builders. We're founders of things. We have ideas we want to build. We invest the first capital. We try to bring something to life, bring it to market, validate it, prove it, and then we go to our venture capital brethren to scale a company, right? So we actually work in conjunction with venture capital. In fact, a lot of VCs will tell you one of the things that's been getting wrong in the last 5 to 10 years is VCs have thrown so much big money at early stage companies, but there's not a lot of high quality early stage companies anymore. It's just almost like a boom or bust mentality. Like, pick a winner you think could work and give it so much money it almost can't fail, which doesn't always work, but that's still the mentality. So we're different. We're now like artisans in the earliest stages of company creation and making sure that we are experimenting rapidly. We're messing a whole bunch of things up, meaning we're killing a lot of projects, and we're only greenlighting the ones that truly have merit. So what that means for an investor is you're getting really early stage exposure, right, into early ideas. But if you trust the way the team thinks, the way they go about their ways, you're going to get a lot of upside in terms of the companies that do work. We do something unique in that in every studio's structure is slightly different. Our investors come into the studio directly, and so every company we ever create, they're a part of. They don't have to make a decision or whether have to be a part of a new company. They don't have to sign new documents. They're just ownership is by virtue of their ownership in the studio. So it just makes it very easy for an investor to make a single decision that they like how we think, our team thinks, and they're part of everything we ever do. In the same way, our financial model is very unique. We don't take any fees to our companies. We don't charge consulting. We don't charge rent. Like, we're founders. Like, why would you charge yourself rent, right? So we are only aligned with the same thing that our co-founders want and our investors want, which is to build a great company and eventually realize an exit. When that happens, we see a payout as a studio. At the same time, 70% of those proceeds go out to all of our stakeholders. So that's when our investors celebrate. That's when my executive team celebrates. So we're all aligned on trying to create the same goal, which is build a good company, find a financial exit. And so that's kind of unique in the space. Now, what makes the studio unique? Look, there's a lot of things you're talking about. This is everybody's talking about venture studios right now. It feels like when we started about 5 years ago, that was the case as well. I talked to a really well-placed insider at the time, picking his brain and showing him our business model and testing my thinking. And he said, look, I've always taken these calls from new venture studio guys, and I was calling from my garage. And you remember when I called you from my garage. But he was like, you're unique in how you guys are thinking. You're unique in the capital you can bring to the table. You're unique in the team you're bringing to the table. So you guys can do something very special. But he said something really interesting to me. He said, and this is 5 years ago, the whole world just exploded. Everybody says they're doing a venture studio. And we spent the last 12 to 18 months talking to most of them, trying to make sure that we were building the ecosystem and we were kind of, supporting the industry per se. But he said to me, we found over the last 12 to 18 months that 95% of those people aren't actually going to pull off a studio. They're not going to raise the capital. They're going to end up doing a specific company or rolling into another studio or whatever. So I think right now we're back in that phase again. And then I think that the concept is very topical. A lot of people are resonating with it. There's a lot of noise, but well-executed teams with the right background, the right capital to actually go the distance, I think there's a very small percentage of the noise you're seeing in the market. So again, when people are looking, I actually would be a massive advocate for folks to invest in the studio market. There's probably 10 or 20 that I could definitely vouch for. We're glad to get our share, but I would also tell people to be careful that we're in this phase where it doesn't take much for someone to say they're doing a studio and pop up a website and put some words on social. It's a very different thing to actually build a venture studio.
Yeah, thank you. No, I'm a huge fan of the forward-thinking approach. And you were starting to already go there. For me personally, one of the key factors that I'm looking at when I'm looking to invest is kind of looking at not just the numbers, because we'll talk about the numbers and those are important, obviously, but is really the commitment, is the strength and the commitment and the experience behind the business, right? The team. And you were starting to talk about that because some of the best ideas can fall short, right? If you don't have the right people to execute them. So can you tell me a little bit more about the core team at Nobody Studios? What makes them, why are they going to be the reason why this is going to be successful for all the new codes that you're building? And how does their expertise give your studio a competitive advantage?
Yeah, I mean, look, I think it's a mix of team, extended ecosystem, and process, right? So I couldn't be more proud of our team. One thing that has been, 100% of the time, when we talk to an investor or a partner and they want to go deeper with us, I give them a list of our executives and say, tell us who you want to talk to. And they might spend a few weeks bouncing around Zoom calls and talking to different folks. But when I end up reconnecting with them, 100% of the time, I hear them saying, wow, that is just an amazing group of human beings. Their backgrounds, their stories, their why, their passion behind this project, their belief in you and the rest of the executive team, like it's palpable, right? And it's just one thing that I can sleep at night knowing I don't ever have to think twice about. I don't have to curate who to talk to. I just say, here's a list, go talk to our team. So I think that, we definitely have the best team I've worked with in my entire career, and super proud of that. But I think that, we all bring experiences. I think one of the things that's super important, I've had 14 startups and, I've had a third of those have had exits. I've had an IPO. I've had a chain of failures and probably 2 other dozen companies that I mentored or angel invested in. So I've learned a lot along that time. And so there's a lot of those gut reactions and instincts come into my decision making because of when you've had those many looks, a couple dozen startups and you've had your capital on the line and it means a lot to you. You learn lessons kind of intimately, right? So it'll come out as I'm guiding companies or I'm, making decisions in the studio. It'll come out like, I'm not gonna make that mistake again. Like, guys, trust me, I made that mistake twice. This is what we gotta do. It just short circuits sometimes the learnings. Now we're learning other things that are more expensive and time consuming that I haven't learned before, but we're not learning those things again, right? And I think our team collectively brings their lessons and their instincts to the table. That's important. That being said, I think it's important that you just don't have, we as a system are not counting on the idea that we just bring our gut feel. We as a system are counting on the idea that we make rapid experiments, we make tests, we double down where the market gives us signals. We let the data drive us, but we're very invested in this idea of rapid iteration and rapid learning. And so that's where I'd say the two combine. If you can have gut instincts and feel driving things where the system is also constantly testing and refining, you can do things, at scale in a pretty powerful way. So that's important to our model.
Thank you. Yeah, no, the team, I've had an opportunity to look at your website and look at some of your team members. But, the other question I had for you was, when I'm looking to invest, I'm looking at what are the type of companies that you're building, right? And are they solving a unique problem or addressing it in a novel way, right? And so can you share a couple of examples of situations where Nobody Studios has done just that? Maybe a couple of companies you've worked on or that you're currently working on right now that, they're going to set us apart, set Nobody Studios apart in a unique way.
Sure, but before I do, I'm just going to say for anybody who's in the audience, it's tripping me out that you're role playing because I'm like, what do you mean, Sejal? You're part of the team. So
I'm good at this. I've had a lot of
you
practice.
are good. I know. I'm feeling intimidated. So yeah, look, I mean, overall, we build companies hopefully that are making the world a better place. We won't do things that are associated with vices in any way. No judgment on those business models. It's just our karma points we're going to bet on hopefully making the world slightly better every single day. The companies we tend to create will be companies that fit our criteria, being we want to make sure it can be profitable by a Series A. So we think somewhere between a $5 to $10 million investment, that company needs to be profitable or at least have the ability to be profitable. We won't do anything that can't be in the market and in revenue within 12 months. So if it takes multiple years to develop, it's off the list. We won't do anything that requires a door-to-door sales or enterprise sales to get off the ground. It can be part of a long-term growth strategy, but we need to be able to have hyper growth driven by digital marketing and digital acquisition. We are partial to product-led growth, meaning you get viral effects when people actually use things. Like an example would be like Facebook or Slack. Their growth took off once a certain amount of people started using it. And let's see. And then the kinds of companies we are focused, again, we said making the world a better place. You'll see us focusing on industries that are kind of obvious with that definition. So health and wellness is an example where we're very passionate. But when you double click on health and wellness, there's a lot of stuff in health and wellness. So we say, okay, what are the particular subcategories that we care about? We care a lot about addiction. We care a lot about mental health. We care a lot about plant medicine or psychedelics. We care a lot about sleep and dreams. And we care a lot about longevity. I think those are the big working themes in the next 10 or 20 years that are going to create some of the coolest big companies. And so we're building companies in that space. So an example would be in psychedelics, we're building a company called WebDelics, which is best way to think of it is like a WebMD of psychedelics. We believe the masses are coming to that space. We believe the science is undisputable that it's going to revolutionize how we treat mental health and addiction, two things that are, use an entire company or entire. Can you hear me?
Yeah, I can hear you. You're fine. Yep.
Can you hear me?
Yeah, I can hear you.
Sorry, I was getting some phone calls.
Yeah.
So, yeah, we believe that, again, plant medicine and psychedelics is going to transform, how we treat two of the biggest issues, globally right now hitting humanity. And so we believe the masses are going to come and try to educate themselves. And as they do, we want to be the preeminent space to be educated, connect with other people, connect with practitioners, connect with people in a marketplace. And so we are building a content first strategy that leads to a community that we believe will be, hundreds of thousands of millions of people worldwide, focused on this space. But we know that what's going on in this industry, which will be $1 trillion industry, if you win the eyeballs first, then you're part of everything else that's going to happen in the industry, right? So that's an example of us making a bet on an industry, but long term, there's probably 4 or 5 other companies we're currently creating as spinoffs of that space. And so we do look for what we call network effects. If you bet on a certain space, are you able to start building economies of scale? Does one business feed the next? Things like that. That way your team, your lessons, even your advisors, your investors, your relationships all start to feed multiple companies versus just one.
Thank you. That's a great example. I'll definitely take a look at that. And so, understanding the financial aspects of it are really important for me too. And again, I've received the due diligence documents. I just haven't had a chance to review them yet. But maybe if you could just quickly explain, how is the studio's valuation determined? And I know it's going to fluctuate over time, so I don't need the specifics right now, but are there specific metrics or milestones that are driving your evaluation, and where do you see it going?
Yeah, I mean, look, evaluations overall in any kind of startup raise is a little subjective. I think if you go get your MBA or you think about your business class you took in, community college or whatever, we think of like there's a exercise to determine evaluation of something, right? Usually it's a multiple of earnings or something like that, right? So if you're selling a traditional business like a plumbing company or a grocery store or whatever, that's a calculation that can determine evaluation. Startups are very different because you're selling the future. So people are looking at something and they're looking at, okay, do I like that vision? Is that big enough? Do I believe in this team? Do they have momentum? Do I have things? So it's like if you saw Facebook in the early days and you're like, oh, this is going to be huge. And it's going to be worth $100 billion, like it is now. They can set a valuation, even though they're a day old, they can set a valuation at 50 million and people are glad to throw their money into it, right? So valuations are a little bit subjective in startups, but then it's ultimately tested by the market. So people who are willing to invest usually set a final valuation. There's usually a lead investor that believes in something. And then other investors say, yeah, I believe in that investor and I believe in this company. I'll go ahead and piggyback on that valuation. So like I said, it's subjective, but it is market tested by experienced investors that can make that assessment in terms of where it is now versus where it's going to go. Our specific case, I self-funded it for the first year and a half. Then we started bringing in angels. We got very fortunate to have a very fantastic group of angels. Their backgrounds are all amazing. They're all great human beings, but the reach they've brought in us is like across the multiple industries worldwide, many people, executives of very prominent companies. And so it's just given us strength beyond the capital because we have this almost extended executive team that we can tap into, which has been powerful. Now, the valuation a lot of those angels invested in versus what we're raising here in the near term, which is our Series A, the increased value for us is going to be about 5x. So that's happening right now. So that's going to be good for our angels. But the folks coming into the current round are seeing the trajectory. They're seeing the momentum. They're seeing the team. And they're also able to do the math and say, wow, let's say nobody's successful at building 100 companies in 5 years. Let's say we're successful at finding 10 to 20 exits in that space, right? We're going to create billions of dollars of returns for our investors. And so not just the cash out payments to our investors, which is how our model works, but their investment in the studio is going to go up significantly. If you're a firm creating those kinds of returns, then the value of the studio goes up significantly. So when we look at it, without talking specific numbers, we believe our model 5 years from now will show a valuation increase of another 20x, 30x from where we're going to be raising at today.
And I've been following your journey for a few years now, right? And I've been seeing the growth of the studio. And I know that you've done different funding rounds. You just started to talk about it. You self-funded for a while, but you also did an equity crowdfunding campaign. Can you talk a little bit about that?
Yeah, very proud of that. So aside from our angels, we did some people are familiar with crowdfunding, but it's a relatively new thing in the last 3 or 4 years, where as a young company or startup company, you can raise capital from any investor, not just accredited investors. It used to be, to invest in a startup, you had to be an accredited investor, which means you basically have a multi-million-dollar net worth, right? The rules changed. As long as you jump through some hoops, audited financials, you get approved by the SEC, et cetera, you can bring in $100 from, any investor, right? And so we did that, and we did that actually not for the capital, to be honest. It's still not a very efficient place to raise capital. You spend a lot of time and money trying to drum up support, but we did it because we cared a lot about the idea that the studio would be powered by the crowd. This idea that if we got this right, we'd end up with stakeholders worldwide, and we did that. So we had a successful crowdfunding, raised like about $800,000 from the crowd. We would have raised more, but the rules changed, and we had to close our campaign, and we decided not to reopen it. But we were building momentum, very successful in a few months of our opening. We ended up with almost 1,000 investors in 55 countries. And, some of these people are in for $100, $250, $500. What's important is if you look at those folks, they're really across the globe. Their day jobs are as diverse as you can possibly imagine. And we just have these, again, another stealth superpower. We talk to the crowd openly about things we're trying to solve for. We get inspired by the crowd. They're actively involved in promoting our companies, recruiting for us. So it's all just, again, an extended group of nobodies worldwide that now is, probably 1,500 strong.
Yeah, I mean, I've never heard of any other venture studio doing an equity crowdfunding campaign, or a successful one, just like the one you just described, right? And so talk to us a little bit about the ROI, the return on investment. Like what can investors expect to receive over what time frame? And the one question that I really was curious about is, are investors allowed to reinvest their returns into future projects or ventures under Nobody Studios umbrella?
Yeah, two great questions that I'm not going to answer. No, just kidding. Two good questions. ROI I will not answer too specifically, because projections are a messy thing, right? Mm-hmm. But we can talk philosophically, right? The way we've modeled it, and we've got a really great financial model, and our CFO's got a video walking people through it. You can see how we're not counting on building companies into unicorn billion-dollar status and exiting them to make a good return for our investors. We're actually focused on relatively small exits, selling companies for reasonable amounts of capital relatively early to mid-stage versus taking the full distance. And around the first or second exit, we realized as a studio, the investors already gotten their investment back, plus they've seen a return. On top of that, they're still part of every other exit we ever create. So now it's like they're playing with house's money, right? And on top of that, their core investment in the studio is still there. So their ownership value is going up because the studio is being more successful. So there's lots of levers that make these a very compelling investment if we get what we're trying to do right. And it's very lucrative, and we've had many accountants and CPAs and others along the way tell us that we could be more greedy into how we structure this, because other people don't structure it this way. They usually structure it as funds. Like, okay, if you're an investor, you're part of these 10 companies or this year and a half, like they have these like windows, and we've been very open about how we structured it. They're part of essentially the management team, same kind of ownership structure. So they're part of everything we ever create. And we think that gives our investors a lot of mitigation to risk and all the upside possible. And we're glad to do that. I don't think in a world of constraints, I think in abundance. And if we get this right, then I want everybody to thrive.
Awesome. And I just have one last question for you. This has been very helpful, but what is the long-term vision? You talk about building 100 companies in 5 years, right? But where do you see the studio, after that, for the, 6 to 10 years? Where do you see the studio going after that? If you can talk a little bit about that, and feel free to add anything else that you think would be helpful to my decision-making process.
Yeah, well, I think it's funny. I do hear those questions sometimes. Like people say, "Oh, great, well, I get what your goal is. You're going to get that done," and then it's like you're you're done. It's like, no, that's actually just a trajectory, right?
Mm-hmm.
We say 100 companies in 5 years for a reason, because we'll probably finish year 5, building 20 or 30 of those companies, right? Which means you're at a trajectory in terms of bandwidth and capacity to keep producing at that level. So, I don't know where we'll end up. It kind of doesn't matter if we end up doing 42 companies or we do 114. It's the goal is what's stretching our systems. It's stretching our thinking to make sure that we understand that we're not trying to do one good company every 4 years. It's a different level of thinking, meaning you're challenging yourself, how to make decisions faster, how to have more scalable, redundant, teams, how to move faster. If you try to build a company the way you used to the last 20 years and try to achieve that goal, you're going to fail. And we find this all the time internally, where things are going too slow or we can't, handle the bandwidth that we have committed to. But it forces us to say, great, we have decided to do this goal, so let's think differently. Let's not apply yesterday's thinking to it. So where we're going to be, we'll be at a spot where we have a capacity to do dozens of companies a year. Again, where do I believe we'll be? We'll definitely be in the global, markets. We'll be in every major emerging economy. So you'll see us with a global presence. We'll have dedicated capital to fund some of our companies as they grow. We'll have access to global capital that people like us and love our brand and what we stand for. So it'll be easy for us to raise for our companies. We really believe that we'll be in a spot in 5 to 10 years where, again, we're hopefully still being rated as a top 10 venture studio. And that'll mean that we have global presence, world-class team, many successful exits, a portfolio of fantastic companies, and access to capital and networks to pull off everything we dream of.
Awesome. Well, thank you again. I know you're super busy and you're on the road, so we appreciate you making this stop and sharing all this details with us. Everybody, if you're watching and listening, if this resonates with you, take a look at our website. There's a lot of different ways you could contribute and be a part of this journey. The information is on the website. Don't hesitate to reach out to me or anybody else in our leadership team if you have any questions. Thank you for joining us, and we'll see you next week. Bye, Mark.
Thanks, Sejal.
Bye, everyone.